after I did my career in banking, I did set up my own consultancy, ran that for 3 years, and I worked for MasterCard in Brussels. I worked on behalf of MasterCard as they actually took over the European Europay card. And that actual takeover was referred to the European Parliament because it was seen as strategic, because this was the European equivalent of MasterCard and Visa. And although I was working for MasterCard, we did actually expect that the European Parliament would vote against it for protective reasons. And working as a consultant, I had no skin in the game. I was getting paid a fee. But we were surprised that the European Parliament, after discussing it, did allow the takeover to take place. So that was the end of the Europay and Europay card, which was the European equivalent of MasterCard Visa. Now, what I hear today is these member banks of Europay are regretting that decision in the Trump era. And that's a very, very good example of the actual political aspects of payments. And as Peter quite correctly identified, is it a well-being issue? You bet it is. If you go to the petrol station and can't fill up your tank because the payment system is down, or Trump has decided to stop Visa and MasterCard in an independent Scotland because we're trying to remove Trident and you can't get your groceries, you better believe that it's a strategic issue and a well-being issue. Anyway, we'll move on to the next guest, who is one of my fellow combatants on the Scottish Currency Group. We meet every fortnight to discuss all things currency, and it's Andrew Murray, who is an expert on banking regulations. And are regulations related to well-being? Yes, they are, because in this very parish, of course, you'll remember that Gordon Brown famously deregulated the banking market, and it wasn't very long until the banks were screwed.
Can you hear me now? Yeah, good. So clearly being screwed is a regulatory term. In some ways, I'm actually disappointed to be here today. I rather thought we might have been independent, but there you go. Life is a funny thing. Listening to Ian talking about Thatcher, the quote I remember, and I don't know if it was true, that Jesus fed 5,000 people with loaves and fishes. A remarkable level of efficiency, in my opinion, was the quote. Whether it's true or not, I don't know. I doubt it. I'm going to spend a wee bit of time today just talking you through regulation and how you transfer it to Scotland, because at the moment it's controlled in London. You get into this area of, do you want to take the current system or do you want to create a new system? And you've got to go over that transitional period, whatever happens. But there's a few other wee considerations that you need to think about in there. My first question to you, though, is, what does it mean to be independent? Any takers? Yeah, not to be run by another country. I did a very academic type of thing. I went on to do some research, clearly with ChatGPT. First stop, everyone. What does it say? When a country is independent, it means it has full control over its affairs, economically and socially. It typically needs its own currency or an official arrangement with another country. Well, you're not getting that one. And a central bank. I tried using the DeepSeek one, the Chinese one. It gave me about 6 pages, and then it finished with this is not within my remit, and shut down, which I thought was, that's quite interesting. So independence means having your own treasury, having a central bank, and having a regulator underneath that central bank that runs your system, that regulates the system, that pulls together the banks, the insurance companies, the financial markets, And it has a duty to ensure stability. And stability, I'm not meaning currency fluctuations. I'm meaning that the banks continue to work in alignment with one another, and that they can work within the markets they operate, because you're going to have a number of markets. You've got the Scottish market, you've got the RUK market, you've got the European market, and then you've got the rest of the world. So there's a whole range of things out there. Now, last year I took some time just to mention the need to replicate the UK system, and this, I'm going to try and work my way through the rule books and explain why that's the case. You need a Scottish version. You need to transfer the data and start managing the system. There are two key rule books in here. You've got the FCA, the Financial Conduct Authority, 57 rule books in there, and you've got the Prudential Regulator with 157 rule books. It's great reading. I recommend it. If you're fed up, listen to the BBC. Okay? Gets you really excited stuff. Now, there's actually a host of other organisations that use these rule books. Lawyers run client money accounts. There's a rule book in here on client assets. The Law Society use the same rule books. These rule books are pretty much the same across Europe. Right? So they're all connected. Nobody just sat down and made this stuff up. It's evolved over about 100 years. So last year I touched on the need for consistency, maintaining stability, and maintaining the existing interconnectivity, because you need these things to work together. If you want to create the system, if you want to change the system, once you've got control of it, then fine, change it. Before you change it, you can do an impact assessment and decide if that's the change you want. Dare I mention the names Liz Truss and Kwasi Kwarteng? Yeah, that's what happens if you don't impact assess it. The place just explodes around you, because there's plenty of folk know you didn't do it right, and they're quite happy for it to blow up, because it's blowing up in your face. Okay? So, last year I did that. This year, I want to explain some of these issues in the FCA or PRA are dealing with. Now, a journey into regulation is a wee bit like Moses in the Exodus, you know? Well, I think it is, because there's going to be a clear separation between us and them. There's going to be plenty of new rules to follow, and if you don't stay on track, you're going to get your feet wet. So we want to make sure that we have a reasonable transition process here. So I'm going to take you on a wee journey through the FCA rulebook to give you a flavour of what's involved here. I'm going to move out a wee bit, if that's okay for the cameraman, because I want to be able to see what it was I wrote. Right, at a very high level index for the FCA, these are the principal headings you've got. Right? The one second from the bottom, regulatory register guides. I don't know too much about that. Handbook guides. That one's got to be that thick. It's got to be 2,000 or 3,000 pages worth. High-level standards, that is what it says from the tin. It's how companies should work together, what their key objectives should be in terms of how they treat people. The prudential standards, there's a wee bit in there about how you maintain liquidity. Business standards is how you operate and how you sell your products. The regulatory process, that's the power of the regulator to shut you down. Redress, what kind of compensation arrangements they have. And then there's a list of specialist source books. I've put a big blue arrow next to that one, listing and prospectus and disclosure. Last year there was a chap here who was talking about the importance of setting up a Scottish stock exchange. And the reason for that is for companies that are starting out to raise capital. Right? So there's a whole set of rules about what you've got to do to get on a stock exchange. And these stock exchanges, remember, are all connected around the world. So they've got a set of rules for it. Now, if you don't have any rules, how are you going to set up a stock exchange? What, you think you're going to write a new set of rules? No, you'll be working with these rules, because your new rules won't align with London, they won't align with Europe, they won't align with the world. So you take what's there and you make it work for you. So I've picked out one of these rule books, the business standards, and I'm going to have a wee look at that. So what have we got there? Conduct of business, how you behave, treating customers fairly, all that kind of stuff. Don't steal the client's money. Insurance, mortgages, banking, claims management, funeral plans, that's a relatively new one. They were fairly unregulated up to quite recently. Pensions, dashboards, client assets, that's the one I mentioned about how you control client money. You're not allowed to spend the client's money, it's their money. Market conduct, how you're buying and selling groups of shares, how you sell them individually, what's the process for processing them. There's a pile of stuff at the bottom there. Oh, a nice wee one thrown in for the Greens. Environmental and social and governance source book. So if you're launching new funds, there's an element of, is there a green element to this? Is there renewable elements to it? You need to be thinking about these if you're doing these kind of things. So I'm going to pick one specific area, insurance. So we're going now into the insurance rule book. And within the insurance book, there's another big batch of rules. I've picked out the headings here just to give you a flavour of what these rules require. Everyone in here will have at least one insurance contract. It might be your car, your caravan, your home contents, your buildings. In there, we've got some general matters. Distance communications. Are you buying and selling this stuff online? Are you doing it by direct offer? And there's specific rules that have evolved for that because people set up websites. Information about the firm. What do you tell the client about whose product it is? Who's selling this product? Whose is the underlying product? I might sell a general accident policy. So it's me selling theirs, but you find theirs is actually somebody else's. So you have a big chain. You've got to disclose it. You've got to tell people. You've got to be talking about remuneration. Have you paid commission? You might see a lot of stuff about car garages have been selling cars, arranging finance arrangements, and they were playing around with the interest rates to generate commission and what have you. Now they're having to pay it back. That's because they didn't pay attention to that rule. Okay? And now there's this kind of, do you do something about it? Do you not do about it? Do you now enforce it? What do you do retrospectively? So you've got all that kind of stuff going on. Product information. What do you tell the client about the product? Have you told them enough about it? Did you give them a fair view of the product? Or did you tell them everything was guaranteed and there are no worries? Or did you say there's any exclusions? Right? Product-specific rules. So if I get some products over the years have developed, some wee eccentricities. So that if there were a problem with them, they brought out extra rules. Motor insurance and home pricing. Anyone know what that is? Remember, it used to be that if you took out your home insurance, they might say it's £100 a year. And at the second year, it's £200 a year. And the third year, it's £300 a year. But if you went to another company, it's only £100 a year. That's the rules they brought in to say you're not allowed to do that. You're not allowed to use the pricing to pull in the market and then jack the price up. That's what these rules are about. Cancellation, the client's right to stop the contract and how much they get back. A set of rules about it. Claims handling, yeah, you're not allowed to just reject all claims. You've really got to pay out some. Now, I'm going to dig in a bit deeper again. So we're getting right in about this. Looking at a specific area. What are we looking at? Product information. Another selection of rule books in here. I was surrounded by paper in the office. Producing and providing the product information. So have you given them a contract? Have you detailed what the terms of that contract, what this product does, and what they have to pay for it? Think in terms of providing information to the customer in general, pre-contract information, general insurance, pre and post information. So I might give you a leaflet, get you to sign up for it, then we send you out the contract, which has all the details in it. The details that you're required to give are in here, right? So the fundamentals of the arrangement between these two parties are detailed in these rule books. Some of them are mandatory, so they have to tell you. There was a document, I don't know if it's still there, called the key features document, which basically explains the aims, risk, and commitment. What's the aim of the product? What's your risk? What are the risks? What's the commitment? It's a 10-year contract. It's a 1-year contract. That's what it's about. Renewals, does it automatically renew? Does it not? The means of communication. If you engage with me online, then I'll be engaging with you online. If you write to me, I'll have to write back to you. Because some companies have a habit of, you might write one way, but they'll write back another and you don't see it. So that stops that kind of behaviour. Bottom, policy summaries. Again, that's that key features document, terms and conditions. These are all detailed for a specific reason, because it used to be companies didn't give you enough information, and people realise you should be getting more information. Right, so why am I telling you? These books are all the same general format. Every one of these 57 rule books have the same general format. The first sections deal with, do they apply to you? I think of from the point of view of the company selling this stuff. Do these rules apply to you and what you're doing? How do you sell them? The information you've got to give the client, the cancellation rules. If you don't replicate these rules, I'm going to say you've got no rules. Does that sound like an idea? Anyone think it's a good idea? No, it's not really a good idea, is it? So these are the rules. These are the rules that are common across the UK at the moment. Post-independence, these are the rules that will still apply down south. We've got a lot of companies currently sell down south. So they need these rules. They've got IT systems that comply with these rules. So they're going to be carrying on with this. Are you going to have no rules? No, you're going to take the rules, get them on board, make sure they're working. If you're comfortable they're working and somebody's got a better idea, you'll assess it and decide whether you think it's a really good idea or whether it's somebody that doesn't really know anything about the product or what it is it's supposed to do, is coming up with a nice wee cliche to sound clever on the TV or the press. Let's have a look at it before you do it. Right. If you don't have these rules, you'll not be selling anything in our UK. You'll not be selling anything in the EU because companies in Britain that currently operate in the EU have an EU passport. That allows them to sell in Europe. They need to comply with the Prudential Rulebook, and I'm going to come on to that in a wee minute. Then they need to comply with the local rules, which is the equivalent of COB, right? COB rules are pretty much common across Europe. There are variations because all the European countries have had different problems, so they've introduced slightly different rules. The Prudential rules are the same. If you don't have any money in the bank, you can't trade. Somebody got to be looking at the bank account and make sure it squares, right? That's broadly what it does. If you don't have this rule book, you'll have zero rules here. So nobody in Europe will let you trade. Nobody in the UK will let you in because you're not a regulated. You don't have any rules. You can't show you're complying with any regulation. Right, some of the specialist rule books. This is another. It's coming from COB again, and I'm just having a wee look at this because there's quite a few. Well, I think they're interesting. Okay, maybe I'm kind of sad. Credit unions. Who's heard of credit unions? The rules, there they are there. That one down at the bottom, regularly covered bonds, securitisation. I'm not too sure what these all are because I didn't work with them. But they mean something about how banks operate, how investments that they're creating operate, and how they come together. Do you want a Scottish stock market? Listing rules, prospectus regulation, disclosure and transparency. So if you're going to launch shares to the public that they're going to buy, there's a set of rules that you have to comply with. You've got to produce audited accounts. So your accountants, guess what they're looking at? These are the rules they're following to make sure your company's fit to float in the stock market. So if you want to have a Scottish stock market, you're going to have a set of rules, or you'll have every cowboy launching all sorts of stuff, and nobody else will want to deal with you. You need to take over these rules and grandfather them in. They've evolved over 100 years. They're broadly in line with Europe and the rest of the world, so the rest of the world's got confidence that you know what you're doing. You want to start a new country, you need a starting point. Using the existing rules provides that and provides the required stability. I think Professor Murphy yesterday mentioned you'll be inheriting the UK tax system. That's right. But once you've got control of the levers, then you can decide what you want to do. Whether you want to create tax incentives for pension funds, whether you want to create tax incentives for renewables, or research and development, or universities. You can decide what you're going to do once you've got control of the levers. No levers, no control. Right, Prudential Rulebook, 157 rule books. My goodness, it's so exciting. There's no end to this. Again, they've actually got the same general format. Does it apply to you? How do you sell your products and services? What you've got to tell the buyer, what information you have to give them, and how they end the contract. So it's all here. Let's have a look at some of the rules. I'm not going to take you through all 157, although you've paid good quality money to come to this conference. You deserve it. I'll spare you some of them. I'm just going to draw your attention to some of the subjects that we're talking about here. Allocation of responsibilities in a company. Is there a document that says the chief exec's the fall guy if it goes wrong? What about the accountant? What about the secretary? The rules are there. Changing control of a company. You can't go changing it and not telling anyone. Okay. Credit unions again, nice big one there. Friendly societies. Anyone still got a friendly society policy kicking around their granny bought for them? No. It used to be quite common, but there you go. Whole set of rules about how friendly societies work. Financial conglomerates, so that's your big companies, how they hang together. Remember Robert Maxwell? Nobody knew what was going on there because the cups on the table were constantly getting turned around and nobody knew what one the ball was under. That's what that's about, controlling. Right, next one, general organisation requirements. Your accountant should be signing off the checks, not the cleaner. Right? Insurance, senior management. I think the thing I'm focusing on here is the senior management's regime. That's about getting the names of the people that are making the decisions and putting them in a register and making them accountable. It was quite thorough up to Brexit, and once the Conservatives got in, they stripped whole sections of that out so people weren't responsible. Right, that's quite interesting, I think. Next page. Financial Services Compensation Scheme. They decide how much companies have to pay in to support the scheme, so that if somebody goes bust, there's money there to pay out. Fitness and propriety. No crooks need apply for this job. It's amazing that you need to tell a company that. But they pick people on the basis, well, he's very good in the golf course. You know, he's a fine chap. I know him well. Internal governance of third country branches. Ooh, that's an interesting one. Because if you're selling in Germany, you're a third party country. And if you don't have a reasonable set of rules, the Germans won't let you trade. Right, so again, coming back to a general theme here, you need these rules. There's nobody in this room really understands the full impact of just tearing up one of these rule books and throwing it out. So don't do it. Don't do it unless you've impact assessed it and considered the implications. Oh, another page of rule books. There's so much excitement in here. Right, senior management functions, senior management regimes and applications, senior management regimes, the skills and knowledge and expertise. Does anyone hear a theme here? Are you recruiting competent people to be your accountant, competent people to be your lawyer, competent people to be on your board? Can you show that you can do that? That's what these rules are about. Down at the bottom there, policyholder protection. If the company goes bust, what happens to the policyholder? Anyone been in a company where the insurance company went bust? No. You'll get some of your money back. You don't get it all back, but you'll get some of your premium back, and now you need to go and arrange another insurer. I'll tell you a funny story. I remember working for a company, and they were changing the underlying insurer of their pet policy. And the problem that threw up was, if you've got a pet policy, it's a 1-year contract. And some people had pets that were currently going to the vet. We stopped the contract. Nobody pays the vet bills. What are you going to do about that? I rather flippantly suggested we just have the dog put down and buy them another one. But apparently that wasn't diplomatically correct. I thought it complied with the rules, because if they'd broken the TV, you'd have bought them a new TV. But I was thrown out. So I think we'll not use this compliance officer. This was way too brutal. Well, I know. I was probably being a bit of an irritant to them, but if they arrange a meeting at short notice and don't give me time, that's what you get. Right. Again, these rule books all have the same general format. Does this apply to you? How to conduct your activity, what you have to tell the buyer, the information you've got to give them, and how you communicate. In summary, these rule books represent 100 years of understanding. In my time, started out as the Securities and Investment Board. That developed into FINBRA and Loutro, and that developed into the Personal Investment Authority, and that developed into the FSA, and then that became the FCA. So 20, 30 years maybe, there's been that amount of change. There was probably stuff before the Securities and Investment Board. I don't remember it though. They must be maintained and developed to reflect how your internal economy works. That also means how you want it to work in the future. But your starting point is pull it over, get it working. If you can get it working, you're doing better than most. How your economy works in relation to RUK, and your economy works with Europe and the rest of the world. Okay. Now, other areas. What have we got? Interbank payment system. Haven't you just heard something about that? There's a rule book that deals specifically with what you have to tell the client about how their tap card works and how the payment system works and when the transaction has to be dealt with. These are retail rules for how the bank interacts with their customer, but there are also rules about how the bank has to interact with the payment system. Okay. Financial Reporting Council, you've got to submit accounts to somebody that knows what they're talking about and can check it and say, yes, you've got enough money to carry on. The Ombudsman Service, I've put a wee blue arrow next to that for a reason. I'll come back to it. Compensation scheme, pensions regulator, data protection, money laundering arrangements, listing in the stock exchange. These are different organisations with different sets of rules, but guess what? The rules all relate to and are similar to these two rule books I've just talked about. If you've complied with them, you'll be complying with these because they all come from the same source. Going back to the Financial Ombudsman Service, that's a really interesting one. It's a separate organisation. They say they're independent. I suspect they play at the same golf course though, right? What they do is they look at people's complaints that have been rejected. And they've got authority to say, no, you shouldn't have rejected it. It's upheld. And they can instruct compensation. There used to be a set of rules in here called you had to treat customers fairly. They used that as a jemmy to deal with any bad behaviour that wasn't actually covered by the rules. That's an interesting organisation. You're going to have one of these. You can influence policy there. You can influence the interpretation of the rule book. Right? You don't need to change the rule book. You say, we are now interpreting this rule as meaning that. Therefore, you've got some, it's not 100%, but you've got a bit of wiggle room in terms of how these companies then operate without having to go to all that. So in that intervening period, you've got control of that organisation. You've got quite a bit of control over the companies that operate in Scotland. Right. A Scottish regulator is required. If you don't control this, you're not controlling your economy. He controls how your bank card works, how your mortgage works, how your car and home insurance works, how your pension works. It also controls what countries your firm can work with. Now, if you don't have your own regulator and you're going to take London regulation, how do you think you're going to negotiate how you want independence to look when they've got control of your banking system? Do you think it's going to work? Do you think your tap card's going to work the next time you use it if they have fallen out over Faz Lane? I don't think so. You think you're going to negotiate something? I think you've given away your cards. That's what I think. Independence is controlling your own economy. Returning to the beginning, and ChatGPT, it turns out they're right. When a country is independent, it means it has full control over its own affairs, politically, legally, economically, and socially, without being governed by another country. The end. Any questions? Oh, a few.
Thank you, Andrew. A few minutes just to take a few questions. Somebody that's not asked questions before in the front row here.
Hi. You mentioned Scottish Stock Exchange, and there was, in fact, a Scottish Stock Exchange. In fact, there were 5, one in Greenock, apparently, until the 70s. So what would stop the Scottish Government doing that now if they wanted to?
Well, you could do, but you're going to have to set a set of rules for how a company lists on your stock exchange. Have you got a sharp pencil? Do you want to start writing a new rule book, or are you going to take that rule book? Could you do it just now? Probably not, because you would need London's approval.
Okay. Yes, the gentleman. Yeah.
Back in the midst of time, I was nearly 30 years ago. I was licensed by, I think it was the FSA at the time.
Oh.
So I'm interested in your point that we need to wholesale adopt a set of regulations, and that all these regulations they're interoperable, so that we can trade with other countries. So I'm wondering, do we need to adopt the UK's regulations, which might not have the best international reputation? Is there another gold standard set that we might either adopt immediately or be planning to transition to countries like Germany or Denmark or Finland or Estonia?
What I would suggest is you go for the data transfer, get control of it. If you hear another country's got a better idea, then by all means develop it and pull it in and go for it. It'll only affect your domestic market, but you need to give your companies time to build the IT infrastructure to meet your requirements. So if you say, we want you to give them another big document when they buy a contract, that's lovely. You need to give them a year or maybe a year and a half to develop the IT systems to do that, and that will then happen within Scotland. It won't happen in the rest of the UK because you made a new rule.
Gentleman at the back.
You hear me, yeah?
Yeah.
This is a question that spans the last in this presentation, and it's about national security. 15 years ago, thereabouts, the Cyber Command of North Korea decided that it would become self-financing. The way the French army became self-financing from 1805, when it went east of the Rhine, to 1814, when they actually recrossed the Rhine and went back to France, they self-financed. And the way that the army of the Cyber Command of North Korea suggested, and they tried, was to do a raid on the central bank of Bangladesh. It failed, apparently, according to the chap called Sangren in his book, The Perfect Weapon, which was published 10 years ago. They failed, but only just, but I don't know the technicalities. Given the virtual nature of currency, are there rules that would, how can one put it, remove the kinetic element of that sort of exchange? Because when you destroy something, you destroy it. When you kill something, you kill them. When you occupy an area, you occupy the area. But if it's virtual and there are rules, could the rules effectively negate such a theft?
Well, if you're going to do something bad, you're going to do it whether or not there's a rule. I think somebody once told me that padlocks are for keeping honest people out. You know, because dishonest people don't really have too much of a problem jamming off your padlock. I think that's probably the same with rules. Yes, you've got to have the data infrastructure that you were hearing about earlier. That's not my area. There is a set of rules within that. Within the banking section, there's the payment services regulations, but that's more retail orientated. But it's there's a wee touch on how banks interconnect. But you're talking about IT infrastructure and security, and that's not an area I know too much about. I struggle to get my own passwords right, never mind anyone else's passwords.
Just conscious of the time, folks, so one last question at the back.
I watched an interview on Bloomberg yesterday. It was Nigel Farage, and he talked about abolishing the FCA, and also Andrew Bailey. It's time for him to go. So I'm also conscious that during the Scottish independence, George Matheson stood up and basically supported Scottish independence. And Ross McEwen, the CEO of RBS, basically said it's up to the Scottish people to make this decision. And yet these were the only two really high-profile people from financial services that really took either a pro-independence stance or a neutral stance. My slight concern would be that financial institutions in Scotland currently would be, how would I say, very sceptical of this huge amount of change. And, you know, you hear about Brexit and this would be Skexit. Could we not pull together high-profile individuals from within the Scottish financial institution community that would again aid this kind of view where Scottish independence is not a constant problem, it's actually a positive direction?
Figuring a few thoughts. One thought is I think the belief in independence is a fundamental core belief people have. I don't know that it's, I think you can learn it, I think you can come up to speed and understand it, but if you have looked at it and you've decided you're against it, you'll be against it. And everything that you think round about that will probably support that position because you believe it to be true. Whereas if you believe in independence, you'll go, yeah, I can see the opportunities because you're looking for the opportunities, your awareness. It's looking for an advert. If you're looking for a new washing machine, you find there's adverts for washing machines everywhere, but if you're not looking for a washing machine, you don't see the adverts for washing machines. If you want independence, you see the argument for it everywhere. Every time you open the paper, there's another place getting transferred south, another power line getting built to take the energy south. So you kind of see the stuff you want to see. Within financial institutions, these people are being driven by their shareholders as to where they see the maximum opportunity is for their company. Within that, you've got the balance of, well, maybe they actually believe there are opportunities. So their ability to accept criticism changes. if your board are saying never, and you say, actually, there's some opportunities, you might explore it. But if you're against it and the board are kind of against it, you'll be against it because there's no mileage in being for it.
Andrew, if I could probably come in here because, like yourself, I've experience in the banking sector. And it was interesting that after 2014, and I'd been working in the bank for years, and it's fair to say you don't get many radical thinkers in a banking institute. But one of my colleagues who had been working on for years to support independence and appeared to be fairly favourable, apologised to me after the 2014 vote and said, "Oh, I'm sorry, Ian, I voted no," because he said, at the end of the day, when I looked at the balance sheet, it just didn't seem to work for me. And I said, "Harry," I said, "it was never about a balance sheet as far as I was concerned." And that, you can't counter that.
You can't counter it.
No. And I had the depressing experience earlier this week of meeting some of my former senior manager colleagues in the same institution, all retired now. And the bad news I'd have to tell you all is that they've hardened their unionism in the period because of the actual, what they perceive to be the record of the SNP in government. They actually, like a lot of people in Scotland, sadly, blame the SNP for potholes, dirty roads, terrible driving conditions. They, that's how they perceive things, and it's very difficult to actually counter that. So, thank you very much, Andrew.